Hello guys. Thank you Hamad for giving us a free time. So hello everyone once again. Today we are discussing the UK manufacturing PMI, which will be out in about 10 minutes from now. And for now me, but I also hope that my colleague Max will join me soon. Hello Max. As you can see at the current moment, the forecast stands at 53.6 points, while the prior figure stood at 55.5. Talking a little bit more about the projections and the historical movements of the indicator, I would like to remind you that UK market manufacturing PMI report showed export and domestic orders picking up, confounding economists' expectations. Manufacturers notched up the fastest growth in production for 16 months, according to the latest market UK manufacturing PMI. The report defined economists' expectations for a fall and instead jumped to 55.5 in October from an upwardly revised 51.8 in September. And the consensus forecast in the Reuters poll of economists was for a 51.3 reading only, barely above 50, which is the mark that separates growth from contraction. At the current moment, the headline figure is seen cooling to 53.6 from October's 55.5, so as long as the actual figure is around estimates. The underlying conditions have not changed, and we expect a reversal in November to 53.6, estimate Societe Generale. Moreover, the devil lies in the detail, and given the worsening UK current account to GDP ratio, the traders would be interested to see if the new export orders ticked higher in November. Meanwhile, input prices and output prices in the manufacturing sector could confirm the BOE's view that inflation is likely to remain low in the short term. Moving forward, as always, we have the experts' estimates. And according to their views, we have the Bloomberg survey summary, where the median estimate stands at 53.6, average is 53.69. Then the high estimate stands at 55 points, low estimate stands at 52 points, while the total number of estimates has reached 27 this time. And what else is important to say is that the expert, the chief UK economist at the consultancy Pantheon Macroeconomics, Samuel Toms, said that for now the PMI is a striking outlier. And with headwinds from China's downturn and wider global struggles, other economists cast doubt on whether this sector can keep up the pace of growth suggested by the PMI report last month. Other surveys pointed to continued recession. Also, the expert said also this. So moving forward, turning to our Dukascopy community sentiment on the pound versus the US dollar currency pair, we see that traders went rather bearish this time at 58.16% versus the 41.84%. Yes, and as always, we have a couple of comments from our community members. Alexander said that last time we had a pleasant surprise in form of 55.5, and this time he expects it to be at least within the expectations. And anyway, the figures above 50 are good. Thus, he is bullish on the sterling, while the other community member is, on the contrary, bearish. And he said that on an average, the UK manufacturing PMI figures have been around 51.6 for the last 7 months, and we saw solid improvements last month when the readings came out at 55.5, the highest in the last 18 months. While this can be taken as a sign of recovery and improvement, it could be also an anomaly due to prevailing conditions within that month. And he expects this month readings to show a significant decline, and thus he is bearish on the sterling. And since I don't have any time left, I would like to give the floor to Max, who will cover the technical. So please, Max.
Thank you very much, Kate. Hello, everyone. I hope you have a great Tuesday so far. So yes, we have the UK manufacturing PMI data releasing around 4.5 minutes from now. And as Kate has just mentioned, the expectations are quite negative today after a surprising reading we have had in October. Now the index is expected to decline from 55.5 down to 53.6 points in November. Also, there are some expectations from big financial institutions, for instance, BNP Paribas, Danske Bank, and Standard Chartered are all projecting the reading to decline down to 53 points in November, so it's worse than even expected on average. Therefore, we have the negative surprise trading strategy today and the cable for the purpose of discussion right now. So as you can see, the market sentiment is actually bullish on this currency pair in 56% of all the cases. But it also means at the same time that this currency pair is slightly overbought for the moment, and we can expect some losses in the foreseeable future. By the way, this point of view is supported by the pending orders on the cable, which are bearish at the moment in both 50 and 100 pip ranges from the spot market price. Moving on to the current market situation, we see that the cross is trading just above the 1.51 level, 1.51 major level, and of course, as usually, to project the possible market reaction after the data is published in around 2.5 minutes from now. Let's have a look at the previous market reactions for the same data release. And as you may see, the reactions for the cable ranged from 9 pips back in August up to 47 pips we have seen last month, when the data actually surprised us very much to the upside. The average reaction for the past 5 months was 28 pips. Speaking about the possible market reactions today, we see the first take profit level in the first support zone just below the 1.51 level, possibly slightly below it, around 1.5085, 95 in that range, because it consists of the weekly pivot point, daily R1, and also some 4-hour supports, which are quite strong ones for this currency pair. At the same time, if we see, for instance, a bigger than expected decline in the reading, we can also see the UK currency dropping down to the second support zone, which is placed at 1.5070, and it is the 4-hour S2 support line. And speaking about, of course, the stop loss levels, in case we have better than expected data today, significantly better than expected, we can see the pair surging up to the area of 1.5135, which is the area which consists of the weekly R1, also some daily resistances and 4-hour resistances as well, including the 4-hour R3 resistance line. Since I have just 40 seconds left, I will shortly mention the technical indicators on this currency pair, which are actually today pointing to the upside for the cable on the 30-minute time frame. At the same time, the expectations for the manufacturing PMI are quite bearish today. The highest, by the way, is just 55 points, which is still below the previous month's reading. I guess we just have some 10 seconds to go till we are going to have the data in the chat section, and hopefully we will see the market reaction from the cable. Let's just wait for the numbers to come in. we see some downward reaction from the cable, the initial reaction already, because the reading is also released worse than expected. The actual manufacturing PMI dropped to 52.7 points, and the prior one was revised also slightly to the downside from 55.5 down to 55.2 points, and it is also worse than expected at this time, worse than it was on average expected by analysts from biggest financial institutions. And of course, the downward reaction from the pound actually makes sense right now. It's not that strong as it used to be. For instance, last month, the average reaction, the overall reaction in the past minute actually was some 18 pips to the downside, so it's not that sharp reaction, but still it's a kind of losses for the pound, which has dropped below 151 major level. Okay, I guess that will be also all from my side on the technical part today for this particular data release. Thank you very much for listening. By the way, speaking about our future data releases this week, don't miss our special coverage, which is going to take place on Thursday, the special coverage of the European Central Bank's meeting and their possible decisions. We are going to discuss that in full, so feel free to join us on Thursday, and of course on other data releases we're going to have this week, including the US employment data on Wednesday and on Friday. Okay, I guess that will be it from my side for now. Thank you very much, and I give the floor back to you, Kate.
Thank you, Max. Once again, guys, the data came a little bit worse than expected at 52.7, as you can see still in the chat section, and the prior figure was also revised to 55.2. So probably one of our community members was correct on the matter, saying that this probably was due to the decline last month was probably due to some fundamentals this month particularly. So yes, stay tuned. Don't forget to follow our schedule, of course, and see you later. Bye.